What if I told you that some countries go bankrupt on purpose, not because they failed, not because they mismanaged their money, but because they discovered a financial loophole so powerful that bankruptcy becomes a weapon, not a tragedy, a weapon that resets their debt, rewrites their obligations, and forces the world's strongest financial empires to negotiate. If bankruptcy is supposed to be the end, why, then, have nations used it to gain power, regain independence, and even rebuild stronger than before? Today, we're exploring the dark side of global finance, a world where sovereign default isn't a mistake, it's a move on the chessboard, because sometimes losing is the only way to win. To understand how a country can weaponize bankruptcy, we have to understand the global financial system itself, a system built not to support nations, but to control them. When a country takes a loan from global banks, bondholders, or the IMF, they're not just borrowing money, they're borrowing time, influence, and sovereignty. Behind every loan is a contract. Behind every contract is a condition. Behind every condition is a leash. And the institutions that hold those leashes are not elected, they're not democratic, they answer to no citizen. They are global investment banks, bond markets, and credit rating agencies, supranational institutions like the IMF and World Bank, and the shadow network of private creditors for decades. These institutions have shaped the destiny of nations: who gets to grow, who stays poor, who remains stable, and who pays the price. So what happens when a nation decides no? What happens when a government says, we're not paying, we refuse? That's where the story begins. And it begins with a country that shocked the world. In 2001, Argentina did the unthinkable. After years of following IMF instructions, austerity measures, and currency controls, the economy collapsed. Banks froze accounts, the peso died, riots filled the streets, 5 presidents resigned in just 2 weeks, and then Argentina defaulted on $95 billion, the largest sovereign default in history at the time. To the financial world, this was economic suicide. But to Argentina, it was a reset button. By refusing to pay, they forced creditors to renegotiate. Debt was slashed. Payments were postponed. The economy, against all predictions, started to recover. Within 3 years, Argentina's GDP was growing faster than the United States. But the world wasn't ready to let that happen quietly. Enter the vulture funds. Private hedge funds like NML Capital and Elliott Management bought Argentina's old debt for pennies on the dollar, then sued for the full amount in US courts, and won. For years, Argentina was blocked from global markets, its ships seized abroad, its payments intercepted, its government humiliated. This wasn't finance. This was warfare, weaponized through contracts and courtrooms. And Argentina's story would set the stage for others. Next, a nation of just 330,000 people declared independence from global finance. In 2008, Iceland's banking system, once 9 times the size of its economy, collapsed. Foreign creditors demanded repayment. The UK and Netherlands pressured Iceland to take responsibility. The IMF prepared the usual prescription, austerity. But Iceland did something different. They let the banks fail. They refused to repay foreign depositors. They jailed bankers. Imagine that. Bankers going to prison, not rewarded, not bailed out, not protected, punished. Iceland defaulted, devalued its currency, and used bankruptcy as a firewall to protect its people, not its banks. Within 5 years, Iceland's unemployment had stabilized, tourism boomed, and GDP growth returned. They chose sovereign failure over public sacrifice. But the message Iceland sent was dangerous. There is an escape, and global markets never forgot. In the same year, a smaller, quieter revolution happened. Ecuador, under President Rafael Correa, ordered an audit of all national debt, line by line. The results: 1/3 of the country's external debt was deemed illegitimate. Correa stood before the nation and declared, "We will not pay illegitimate debts. We will not sacrifice our people for contracts made in secret." Ecuador defaulted. Creditors panicked. Analysts predicted catastrophe. Credit ratings agencies downgraded the nation instantly. Then the twist. Ecuador bought back its own bonds at 30 cents on the dollar. They slashed billions in obligations instantly. and redirected the savings into healthcare, education, and infrastructure. Ecuador grew. The message the world heard: bankruptcy isn't just failure, it's negotiation. If debt is a chain, default is the bolt cutter. So far, this sounds like a pattern, right? Nations default, gives suffer, briefly gives recover stronger. But for every Argentina, Iceland, or Ecuador, there's a Greece. In 2010, Greece was drowning in debt, not because of social spending, but because European banks used Greek bonds as a casino table. When the gamble failed, the EU and IMF stepped in. But instead of letting Greece default, they demanded austerity. Hospitals closed, pensions collapsed, unemployment hit 27%. Rather than defaulting, Greece paid the price so banks didn't have to. Why? Because Greece wasn't just a country, it was a message. Powerful states sent a signal to the rest of the world: if you default without permission, you will suffer. Default is tolerated only when it doesn't threaten the system. When it does, the system bites back. Today, sovereign debt is bigger than ever. Global debt has surpassed $300 trillion. 60% of developing nations are at risk of default, and more than 100 countries owe more to foreign creditors than they spend on healthcare. The world is a powder keg, waiting for a spark. Sri Lanka, 2022 first country to default in the 21st century due to fuel and food crisis. Lebanon 2020, default amid currency collapse. Zambia -2020, Suriname -2021, Ghana -2022. The cycle is back. And here's the dark truth: we are not seeing a glitch, we are seeing a design, because debt doesn't just buy profit, it buys power. And default, when used strategically, is the only The financial world claims that default is chaos, disaster, a last resort. But history tells a different story. Argentina used default to break free from IMF control. Iceland used default to protect citizens over banks. Ecuador used default to erase illegitimate contracts. Russia in 1998 used default to reset inflation and rebuild strength. Even the United States in 1933 effectively defaulted by abandoning the gold standard to regain monetary control. Default has never been just economic. It's geopolitical. It's psychological. It is a declaration of sovereignty. But every escape comes with a price. Credit rating, blackmail, trade retaliation, currency attacks, international lawsuits, media narratives, branding nations as irresponsible. Default doesn't destroy a nation, it destroys its reputation. And in the global market, reputation is currency. We are entering an era where more nations may consider default not as failure, but as strategy. The world economy is built on debt, but debt is reaching its limits. When countries decide that paying is worse than defaulting, the system will face a stress test unlike anything in history. Imagine Europe under inflation pressure, the US approaching $35 trillion in national debt, China facing property market collapse, developing nations choosing strategic default over austerity. We are closer to the edge than most realize. The next global conflict might not be fought with armies, but with interest rates, bond markets, and currency devaluations. Conclusion: 3 key takeaways. So what did we learn? Default is not always failure. Sometimes, it's a negotiation tactic, a reset button, a way to rewrite the rules. Debt is a tool of control. Money isn't just numbers, it's influence, policy, sovereignty, power. The global financial system isn't stable. It's a balancing act built on confidence, and confidence is the easiest thing to lose. Right now, someone, somewhere in a government meeting room is asking, what if we just stop paying? What happens when too many countries ask that question at once? What happens when default becomes contagious? Maybe the system collapses. Maybe it evolves. Or maybe the world discovers a new kind of power. Because the darkest secret of global finance is this: sometimes the only way to win is to walk away from the game. If you found this story eye-opening, if it challenged what you thought you knew about money, power, and the world economy, then you're exactly the kind of person this channel was made for. Hit the like button, it tells the algorithm this content matters. Subscribe for more hidden histories of finance, geopolitics, and power. And comment below with your thoughts. Should nations be allowed to default without punishment, or would that destroy the global economy? The debate starts with you.